When it comes to blue chip ETFs, XDIV may not be the first one to come to mind, but that does make me wonder, just maybe they should. Fasten your seatbelts, folks. This is going to be a good one. The iShares Core MSCI Canadian Quality Index ETF comes with that catchy XDIV ticker. This ETF, they invest in the MSCI Canada High Dividend Yield 10% Security Capped Index. Whew. Well, that's a little bit of a mouthful for sure. This index basically contains companies that meet 4 key criteria as set by that MSCI index. First off, they are looking for companies that pay reliable dividends. I can definitely get behind dividends, that's for sure. Also, and you guys know, I love this one, but they are looking for high return on equity companies as well. Next, they are looking for low earnings variability, which is just a fancy way of saying they want stable earnings. And finally, they're looking for a strong balance sheet. So those fundamentals are definitely important. And that, of course, is music to my ears. These factors help to identify companies that are financially sound and likely to maintain or grow their dividend payments over time. XDIV offers a convenient and cost-effective way to access a portfolio of high-quality dividend-paying Canadian stocks. Their focus on sustainable dividends and diversified holdings does make it appealing for those seeking income and potential long-term capital appreciation. Of course, on the mindful side, this ETF does have a stronger concentration within some financial sectors, such as wealth financials. So you want to take that into consideration in your overall diversification strategy. Also, you do not get any international diversification with this one. Did you know a sub to the channel allows you to diversify into some nice looking future content? XDIV does publish a semi-annual management report to let us know what is going on with the fund. Their latest report at the time of recording is from June 2024. I did take a look through that report, and there was one highlight that did catch my attention. During the first 6 months of 2024, their assets under management increased from 927 million to 1.28 billion, which was mostly due to net subscriptions to the fund. That's not too shabby. Normally, I do like to have more than one highlight from a report, but in this case, their report was really, really bare bone. So there wasn't a lot of meat for me to pull off, that's for sure. With that being the case, I think it's time that we hit those numbers. Of course, if there are numbers involved, we need to call on the archmages of algebra, the mysterio of multiplication, the one and only Mr. Math. As usual, we will begin with a little surface data. At the time of recording, they had a current value of $29.65. Their NAV coming in at $29.77. Those net assets under management, $1.53 billion. So we do know that they added another 250 million since June. That's not too shabby. They do have a beta of 0.78, so they're definitely less volatile than the market average, which would have a beta of 1. Their price to earnings ratio coming in at 14.81, and their average trading volume comes in at 89,607 per day. Their return on equity, we know it's going to be good from what's in that fund, 15.61%. Return on assets, 2.27%. These numbers do look really good. So let's peel back another layer and look more into some of those fund specifics. We will, of course, start with the fees. They have a management fee of 0.10%, and their management expense ratio, that's coming in at 0.11%. So that's actually not too bad. If we look at the fund itself, their top 5 holdings, Manulife Financial coming in at 9.68%, Sun Life Financial, 9.29%, Royal Bank at 9.13%, Enbridge at 8.83%, and Pembina Pipelines at 8.67%. I already can tell that financials are going to be a heavy diversification in this fund. And when we do look at that diversification breakdown, we do get financials at the top of the heap with 47.64% of the fund, energy coming in a strong second at 28.58%, and utilities comes in at 12.44%. Of course, another big consideration with an ETF is how are they taxed? So using 2023 data, their dividends were 95.59% Canadian eligible dividends. That's not too shabby. The rest, 4.41%, was return of capital. And of course, that return of capital does not get taxed. Well, it does if you sell the asset, because that actually lowers your adjusted cost base a wee bit. Not a lot. We're talking very small number here. Okay, let's dive even deeper and take a look at their returns. We will, of course, let's start with the dividends first. They do have a yield of 4.424%. It's a monthly dividend of 10.6 cents per share. Over the last 5 years, they have had an average dividend increase of 6.34%. That's pretty good. Looking at their 3-year return, that return on investment comes in at 22.32%. Factor in the dividends, we get a total return of 35.04%. I'm liking that. I'm liking that quite a bit. Let's take a look at their 1 year. So on the 1 year, their return on investment comes in at 21.32%. Add in the dividends, we get a total return of 25.60%. These numbers are absolutely fantastic. When it comes to measuring them up against their benchmark, the MSCI index, they do stack very close, and they come in just under the index. And honestly, they're basically coming in just under by about the management fees. So we know those management fees are certainly doing their thing. If you drip this ETF, though, you do move above the benchmark for sure. Okay, I think it is time for that final verdict. This is an ETF that does fulfill the role of being a blue chip core ETF that you can dollar cost average into and forget it, as it will keep the returns flowing. It does not have spectacular dividends, as they do not use leverage or covered calls, and that is why it can be very attractive for lower risk profiles. I think this ETF is very good for total return investors and for providing good exposure to some of the Canadian key sectors. The pure income investors, though, they will more than likely pass on this one. But if they want some stability with moderate dividends, this one could be the fit. I do like this ETF overall, and the tax profile on this one also makes it ideal for folks who want to hold it outside of a registered account. You gotta love eligible dividends. If you are interested in XDIV, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on under $15 dividend stocks. Thank you for watching, and I will see you in the next video. Oh, this is going to be so bad. This is going to be really bad. All right. All right. I have removed the lid. All right. We're going to see if I can do this here on the camera. All right. All right. Oh, boy. There we go. That's a lot of hot sauce.